Billionaires don't hide money in secret vaults. They don't move suitcases across borders. They don't bury cash underground. Because the smartest way to hide money is to never touch it at all. Most people believe wealth is cash. That single belief is the reason most people never escape the system. Because the richest people on earth don't earn money the way you do. They don't chase income. They build ownership. And ownership follows a completely different set of rules. This video isn't about crime. It isn't about conspiracy. It's about a system that quietly rewards those who already own assets. And once you understand it, you'll realize nothing was ever hidden. It was just never explained to you. Cash feels safe. You can see it, you can count it, you can touch it. That's why most people chase it. But cash is the weakest form of wealth in the modern economy. The moment you earn cash, three things happen immediately. First, inflation starts eating it. Second, taxes start chasing it. And third, the system records it. Cash creates a trail. Every dollar you earn is visible, trackable, e-taxable. That's why rich people don't store wealth in cash. Not because they hate money, but because cash stops working the moment it reaches your hands. It doesn't grow, it doesn't multiply, it waits. And waiting is expensive. Most people believe wealth means having a lot of money in the bank. And that belief comes from salary thinking. You work, you earn, you save. But wealth doesn't live in bank accounts. Wealth lives in assets, companies, land, shares, intellectual property. Assets behave differently than income. Income is taxed the moment it appears. Assets aren't. As long as an asset isn't sold, its gains are unrealized. And unrealized gains don't trigger taxes. That's not a loophole. That's the foundation of the system. Selling assets feels logical. You want money, so you sell something valuable, but selling is the most expensive decision a wealthy person can make, because selling creates income, and income triggers taxes. That's why billionaires avoid selling. Instead, they borrow. Borrowing doesn't create income. It creates debt, and debt is invisible to the tax system. When you borrow against assets, you unlock value without breaking ownership. The asset keeps growing. The loan keeps you liquid, and taxes never activate. Banks don't lend based on effort. They lend based on collateral. The more assets you control, the safer you look. That's why the richest borrowers get the lowest interest rates. Risk isn't emotional. It's mathematical. Assets reduce uncertainty. And uncertainty is what banks hate most. So the system rewards those who already have something to lose. This system wasn't designed to protect billionaires. It was designed to encourage investment, to keep capital inside businesses, to fund growth instead of consumption. The problem isn't corruption. The problem is scale. Rules built for small businesses behave differently when trillion-dollar entities use them. The rules didn't change. The size did. People ask the wrong question. They ask, why can't I do what billionaires do? The answer isn't intelligence, it's access. Without assets, there is nothing to borrow against. Without leverage, there is no protection from taxes. This isn't a mindset gap, it's a structural one. So no, billionaires aren't hiding money. They're hiding from selling, and in the next part, we'll look at the structures that make this possible. Companies, trusts, foundations, and why they exist at all. Up to this point, one thing should be clear. Billionaires don't stay rich by earning more money. They stay rich by never needing to sell what they already own. But ownership alone isn't enough. Ownership needs structure, because raw ownership creates visibility, and visibility attracts taxes, regulation, and attention. So the real question becomes, how do you own massive wealth without personally appearing wealthy? That's where structures enter the picture. Most people own things directly. Their name is on the account, their name is on the asset, their name is on the income. That's simple. And that simplicity is expensive because direct ownership makes you visible. Billionaires avoid visibility, not to hide crimes, but to reduce friction. So instead of owning assets directly, they own entities, companies, trusts, foundations. Each layer creates distance, and distance changes. Let's start with companies. A company is not just a business. It's a legal person. That means it can own things, borrow money, spend money, and absorb risk. When a billionaire owns assets through a company, those assets are no longer personal. They're corporate. And corporate rules are different. Companies don't earn income the way people do. They generate revenue. They deduct expenses. They reinvest. They delay profit. And profit is what gets taxed. So the goal isn't to make profit. The goal is to control cash flow without triggering taxable events. This is where most people misunderstand wealth. They think rich people want income. They don't. Income is noisy. Income is visible. Income is taxable. Rich people want control. Control over assets. Control over timing. Control over realization. A company gives them that control. And once control exists, the next structure appears. Trusts. A trust sounds mysterious, but at its core, it's simple. A trust separates three things: who owns, who controls, who benefits. In normal life, all three are the same person. That's why normal life is expensive. Trusts break that connection. Assets inside a trust are no longer owned by an individual. They're owned by the structure. That means the individual doesn't technically have the wealth. They just benefit from it. And the system treats beneficiaries very differently from owners. Why does this matter? Because ownership triggers responsibility. Responsibility triggers taxation. And taxation is friction. Trusts reduce friction, not by cheating, but by following rules designed decades ago for estate planning, family protection, and continuity. Rules that were never updated for modern scale. So when billionaires use trusts, they aren't exploiting a loophole. They're using a feature. So what is this video really saying? Not that billionaires are villains, not that the system is evil, but that most people are taught how to earn, not how to own. And earning will always be taxed first. Ownership gets questioned last. Once you understand this, money starts making sense. Why rankings change, why debt is powerful, why cash is weak, why ownership dominates income. Nothing was hidden. It was just never explained to you. This isn't a call to hate the rich. And it's not financial advice, it's awareness. Because you can't play a game properly if you don't know the rules. And the rules of money were never designed to be intuitive. They were designed to reward control. If this video helped you see money differently, that's the point of this channel. Money Unmasked isn't about motivation. It's about clarity. If you want more videos that explain how money actually works, you know what to do.